Welcome to the Trent Klarenbach podcast, brought to you by the Klarenbach Grain Report and Klarenbach Special Crops Report. Today's guest is a lifelong friend of mine. His name is Shaun Wildman from Flaxcombe, Saskatchewan. I started playing minor hockey with Shaun back in Etonia. Know his family quite well, play hockey until recently with his father and his brother. Shaun, welcome to the show.
Good morning, Trent. Thanks for having me.
Yeah, it's great to have you on here. So, Shaun's had quite a illustrious career, I would say. We went to ag economics together at the University of Saskatchewan, graduated both in 94, I guess. And from there you went into the commodity trades and eventually became the largest canola exporter in the world, which is quite an accomplishment, I would say. So, but before we get into that period of your life, Flaxcombe, Saskatchewan, tell me, what was that like growing up in that community?
Well, just like the area that you grew up in, there was lots of travel required to see other people, I guess. And it's funny how I think of now my son, the area of Regina that we live in, he jumps on his bike and he can see all his friends within, 1 block away, 2 blocks away, 5 blocks away. It's pretty pedestrian friendly. Whereas I don't know, when I was 13 years old, I was riding my Yamaha YZ80 10 miles away to the pig barn to take care of my pigs that I was raising at our friend's place. And, by the time I was 15, I was driving to Sask to visit people 25 miles away, or 14 or whatever. And a little bit, a little bit different than my kids now in terms of getting around. I guess people in West Central Saskatchewan living on the farm are still probably traveling long distances to visit people and whatever. But yeah, no, it was good. The playing hockey. I was thinking about this. You and I played hockey together. I played hockey all over, actually. Like, my first organized hockey would have been in Marengo, and that rink got shut down shortly thereafter. And I played in Kindersley, and I played in Etonia, I played in Colville, and I played in Robert, and all those places are 30 to 50 miles away, right? But again, that's sort of what you do when you live in rural Saskatchewan. And I guess now, if you live in rural Saskatchewan and you're really competitive, you're driving your kid into Saskatoon to play tiered hockey or whatever they're into, right? So it's yeah.
Well, you beat a lot of people from other communities. If you just played hockey in Flaxcombe, per se, right? You wouldn't meet these people
Yeah.
from these outside communities, which I think
Well,
there was.
if you're stuck playing hockey in Flaxcombe, I guess I wouldn't have been meeting too many people in hockey. I'm not sure we had a community rink at the time, but
Yeah.
yeah, you had to travel a little bit.
It was
So
probably, was it Tiny Mite or Adam, or I don't think it was Bantam you came down to Etonia, but Kenny Becker was probably
Pee-wee,
coaching.
I think.
Pee Wee?
Was it Pee-wee or Adam? When I was in Marengo, or sorry, well, I went to high school or to school in Marengo, but yeah, I think we came down to Etonia. Maybe it was younger. Maybe it was something like Adam. Because I remember getting stuck on of course, there's all grid roads, right? The road was the back road because it's all
Yeah.
back roads. Um, but yeah, no, I remember getting stuck coming back from practice or a game in a blizzard in the road with Archie Woodsky and the Grand Prix. And people don't understand what a real blizzard is until you're on a back road and you can't see anything, right? It's you can't take your hand off the car to go take a pee or whatever because it's a complete whiteout. So whatever time that was, I remember that was part of my initial Latonia hockey experience.
Yeah, we probably got up in those curves and those hills south of Flaxcombe, and again, pretty rough too there at times. So, yeah.
Yeah.
So then, yeah, you went to high school, graduated in Kinnersley, and then off to
Wow. Ringo.
Ringel? Oh, really?
Yeah.
I
Yeah.
guess.
Westcliff Composite. Our farmhouse is like 12 miles from Ringo. So we're sort of on the periphery of what at the time was the school zone or whatever you called it.
Yeah.
So yeah, Maringo, I don't know. It probably still does. I mean, it has a pretty big draw south and west. And I
Right.
mean, as you go further west and north and south, you get into a lot of people living either further apart. So
Yeah, it's fairly isolated west, well, north and south of there, really, for that north
well,
and
actually, as you get into Alberta more, it really becomes more isolated, which is, of course, there's a lot more population in Alberta, but you got to go further west and
yeah.
closer to the mountains. But as you get across the Saskatchewan Alberta border on Sask to west and south, there's a lot of pasture.
It's
And,
pretty rough back there at places for sure. So,
yeah.
okay, so U of S, you started in 1990, I guess, the year after I did.
Yeah, I started in 90 and I had 4.5 years of classes. So I would have convocated the spring in 95 because I was done, but I think because they only did the thesis reviews or whatever once per year. So I didn't graduate until the spring of 95.
Okay. Yeah, I was spring of 94 for that same reason as think I took 4.5 years, I guess, to graduate. So yeah, that was an interesting time, university. I remember I look back on it now that had a speaking class. I don't think you and I were in the same class, but maybe we're taking it together, and it was quite intimidating for me, anyways. A public speaking class at the university was that the same way for you, or?
Oh yeah. Well, and it still is as I told you before doing the podcast, that's not really my strong pub, public speaking, and I did a lot of it, or I've done a lot of it, in my various roles in marketing and advisory. And I would go out and I'd be the featured speaker at not huge events, but you go to the crop production show and you're the featured speaker for 300 guys in the audience, and it's super intimidating. But sort of my crutch would be I would know to make myself comfortable. I know every single number of every single thing we're gonna talk about, and there is no spontaneous discussion, which makes it probably not interesting. But that's sort of the way I've done things
Yeah,
in the past.
preparation.
Yeah, and I was gonna regarding the finishing university, an interesting thing. I actually started working full time at Rayglen Commodities the start of December. So before I'd even finished my classes, I knew I was going to pass. So I was like, what's more important, starting a job to make money or whether my average is my final class is 69 or 79 or 84 or whatever the number was going to be. I knew I was going to pass and I was going to get my degree. So I was ready to roll. I was ready to work. And if I had an opportunity to move anywhere in the world at that point in time, I would have done it pronto.
Hey, so what was that role like at Rayglen then? Rayglen's still operating and different ownership now, but yeah, you were what that look like? Broker in grain?
Oh, it was fantastic. Actually, it was a great learning experience. I mean, after that, as you probably know, I went to work on the Chicago Board of Trade floor and then on the Winnipeg Commodity Exchange floor. And that sounds really cool, right? You say to someone from rural Saskatchewan, I was trading or I was actually an arbitrage clerk, but I was at the Chicago Board of Trade, and they're like, wow, that's a big deal. And it is pretty cool. But quite honestly, what I was doing as a broker where I had responsibility. So as a broker, I wasn't taking physical title to the product, right? You're just putting a buyer and a seller together and charging commission, but I was pretty ambitious. That's sort of my strength is negotiating and arbitrage and things like that. So, this is Shaun Wildman that didn't really know a lot about special crops. And, there's, I think it was a PL 480 food aid program. When I started with the Rayglen of that year, they'd shorted there was a deficit of pulses in the Pacific Northwest because all those processors got short against food aid tenders. And we were moving peas down from northern Saskatchewan into the Spokane area and getting producers like time the price was maybe $4 a bushel, we're getting them $5 a bushel. And it was like huge. You would never, there's no opportunity for that arbitrage anymore because the markets are too transparent and inefficient, right? There's lots of people participating, but at those times it was hard to figure. Not too many people knew what the price of peas were in Spokane, right? And so it was pretty awesome. Like for a young guy that was interested in that sort of thing, it was like, yeah, it was awesome that you could phone a farmer up and like, hey, the local bids are $4 a bushel, but I can get you $5 a bushel back in the farm. And yeah, and moving flax down to Minneapolis, which I hadn't traveled at all at the time, right? I had no international travel experience beyond one excursion in Montana, I think. So it was somewhat exotic going to all these places, or at least moving product into these places. It was a great learning experience, fantastic. And part of it was because I was given so much responsibility, right? It wasn't necessarily the scale, but I was the guy that was putting together all these deals, right? So it was a good experience for the year that I did it.
Bet. Oh, so you were there for a year. Okay, I lost track of how long that was. Okay. And
Yeah, give or take a year, something like that.
and then you, okay, how'd you get on the floor then? How'd you end up in Chicago?
Well, with Rayglen Commodities, we had a relationship with Linko Futures Group. They were futures guys, so we were helping out farmers and futures. We'd set them up if they wanted a hedging account or a trading account or whatever, and we'd invite Paul Erickson out to do a speech, or I think Rob Diziak maybe, to speak to the farmers at Saskatoon, or we put them on, I don't know if we had video calls at the time. Maybe it was probably on a speaker call or conference call or whatever. And they advertised for a job in Winnipeg at the Winnipeg Commodity Exchange, being a floor trader. And I'm like, that to me at the time sounded like the coolest thing, right? Because you probably went to Winnipeg as well as part of the AGAC trip, or maybe you didn't.
I don't
I don't know.
remember it. No, I think I missed it. Yeah.
Oh, did you? Okay. Well, guys young guys get excited typically about trading floors and things like that, or a lot of us did. And I thought that's pretty cool. I would love to do that. I'm sort of involved in the market side of things. And so I applied for that job. I didn't get it, but what I did get was an offer to work in Chicago with a proprietary trading group. So meaning trading for their own account that was financed by Linko Futures Group. So not filling orders for customers, but trading for your own accounts. So this was right on the cusp of options getting going, I think, at the Chicago Board of Trade. And if you were a good trader, you could, through synthetic strategies, you could lock in. Like it wasn't speculation. You could back to back lock in by buying a call, selling a put, whatever, and being delta neutral, and you could lock in margin. So if you were the best options trader, which I was working with a group that was pretty good, they were pick and bank, and so they needed people to work with them to be arbitrage clerks. So I initially stood in the options pit, corn options pit, and arbing over to the corn futures pit, with the hand gestures to hedge those positions. And then we continued to grow because the group collectively was doing quite well. He moved somebody into the cattle futures, and then myself and another young Canadian guy who had experience in oil and gas. We started working together overnight when they started trading Project A, which was initial electronic platform for futures, and it traded at night. So it was trading at the same time as the Tokyo Grain Exchange. So our little project was to arbitrage US soybeans against Tokyo Grain Exchange soybeans, and do all this analysis and try and make some money and so on and so forth. And it was pretty cool, right? Like, to be honest with you, probably, I mean, I learned some stuff, but just for someone from rural Saskatchewan, it was going to Chicago, the big city, you know, that when you and I grew up, there wasn't a lot of diversity. Everybody kind of looked like you and me, right?
Yeah. Yeah.
And
Yeah.
well, Saskatchewan's got a lot more diverse in those 35 years since, but going down to Chicago was a big deal. I was like, wow, this guy I'm talking to is is from Puerto Rico. That's pretty cool. He speaks Spanish. The area that I lived in was mostly Polish and Puerto Rican, and it was a real sort of cultural experience. And then being on the floor of the Chicago Board of Trade, which is the center of price discovery for the world for for ag commodities, right? That was pretty cool. And at the time, so pre 9/11 pre-security protocols, people could come onto the floor. So I had visitors coming down, people that I didn't even really know that well, that I could get them onto the trading floor and they could observe where, you've got 500 people in a pit open outcry and there's literally fights that would happen and things like that. It's sort of like playing senior hockey, right? Like it was, and those days have disappeared. I don't think there's much for open outcry anymore. It's all electronic, right?
So what years would that have been down there?
That was, yeah, I was only there for a year as well. So 96, I'm going to be off a little bit, but yeah, I would think it was 96. Like it was just a short period. And then I was offered the opportunity to go back to Winnipeg with Lentil Futures Group as a retail futures broker, right? So, the Chicago experience was kind of cool. I wasn't getting paid very much money though, right? And I thought there is an opportunity to make more money in being a futures broker. And so I went to Winnipeg for a while um, with Lentil Futures Group. And then shortly thereafter, I got called by someone I put my resume into before, Xcan's hedging group, in which they needed somebody in Regina. And, as a young guy with a student loan, et cetera, the appeal of making $4,000 a month guaranteed with all these other things was like, oh my God, I'm going to be rich. So I'm going back to Regina. so, so that's where I went in 1997 for a while. And that was being a futures broker as well, which is primarily, doing farmer meetings, hedging, teaching farmers how to hedge. Although probably the majority of our volume was actually people speculating on gold and things like that, because hedgers don't generate a lot of volume, right? It's you need some big volume. You need a pretty big farm to make a broker much money on commission. So yeah, our activity, the most of the volume actually came from all the speculative stuff, which precious metals are one of the big ones.
That makes sense. Makes sense. Do you still have your jackets from the floor?
Yep. Yeah, I've got my jacket and I've got well, I just have the one from Winnipeg. I don't have the one from Chicago. Got my badge, WILD,
Oh yeah.
right? So an interesting thing about the open outcry and like Winnipeg's, so there is a period where I went from being this retail broker and then I went back to Winnipeg. So I did a lot of back and forth, right? Now where I was actually in the Winnipeg Commodity Exchange, but it was so much smaller because there's only 30 guys there total, right? Whereas the corn futures pit alone had 500 people. But, at the time, well, there was a period of time actually where all the trades were written in pencil. It's like, well, how can you ensure contract integrity or prevent out trades? Like an out trade is where you and the other guy disagree as to what you actually traded or who traded or whatever, right? So so you'd have the guys in the pulpit looking down to make sure that everybody was doing everything, being compliant, and you'd timestamp things. But for a period of time, like everything was written in pencil. Well, there was a lot of room for shenanigans to happen, and a lot of room for out trades and that sort of things, which I guess is part of the reason why we've got electronic trade, right? It's a lot harder for shenanigans to happen when you enter an order electronically. It's verified.
I bet I remember you going down and thought, man, that's a cool thing to do. And I caught a documentary on YouTube. You could probably find it. Maybe you've seen it. It's called Floored. Have you seen it? You might
No.
want you might want to check it out. You might recognize some of the characters in there, and there's some characters in this documentary. And the Nigerian brothers are in there. You probably heard of them, but there's these other characters who are just quite interesting. So yeah, it would have been a wild time on there. Like you say, fisticuffs, fights, pushing and shoving, and yelling and screaming, and
Yeah. Well, I think the first day when I was on the floor at Winnipeg, and I was a clerk when I was in Chicago, so I wasn't. Well, I guess I was arbing orders, but your big activity, especially in Winnipeg, is your market on close orders, right? That had to be executed in the last. The closing price when open outcry was last 30 seconds or 60 seconds or whatever it was, I forget. But that's what would establish the price you'd see as a settlement price in the DTN, right? It'd be this time period. So everybody would have orders from their clients to, buy 500 market on close, sell 500 market on close, and it'd be absolute chaos, right? Guys screaming in each other's faces, trying to, if a local who was trading for himself shorted it at the start of that at the start of the market on close order, he wanted to slam it down so the settlement was lower, so his trade would look good. Just all sorts of stuff, right? And the first day I went through someone's order, which means I screwed up, right? The guy's screaming at me from this side, and I was like deer in the headlights, and I traded with someone else, and I should have traded with the other guy that was screaming in my ear, and he wanted to fight me, and it was like, it was like a nice welcome. To be honest with you, I wasn't a very good floor trader. I was the spontaneity of it. I'm much better doing it on a screen. So
well, you
some people
really.
have that skill set and some people don't.
I didn't think I had the strong enough personality or the aggressiveness to be a floor trader. I remember you going down there. I thought, geez, I don't. It's impressive you could do it because I didn't think I'd survive in it very well. I guess maybe you'd learn to adapt if it's your job. I guess, but yeah.
Yeah, it's man, there was some money being made because like if you go back to 1996, a full badge, which allowed you to trade in any pit, was like 500,000 US dollars or something at the time. The reason people are paying 500,000 was because if you were savvy and you had enough capital backing you to do these big positions, you could make good money, right? And
Yeah.
it was just exploiting a quarter cent differential or whatever, right? Or half cent differential between, what's happening to the left of you and what's happening to the right of you and so on and so forth.
Wow.
The scale was a lot smaller on Winnipeg. I think I could have bought a seat on the floor of Winnipeg for $5,000, maybe 1% of what you had to pay in Winnipeg. But I will tell you so it's Ice Exchange now. I'm not sure who initially bought it, but when those seats went from $5,000 to, I don't know, 100,000 or 150 or something. And if you look at it, your fees like this, the fees that I've got for the live quotes that I have now is friggin' there's a lot of market concentration in electronic markets, right? So,
Ooh.
and commodity markets. Equity markets are cheap and lots of data available, but commodity markets are, if you want to get live quotes, I'm assuming you have that. It's pretty expensive, right?
Yeah, relatively to equities for sure.
Oh it's quite expensive, but
So the floor, I hear people talk about the energy on the floor. It can be really quiet. Probably opens a lot of activity, gets quiet throughout the day. But in your year down on those floors, could you kind of feel energy building? Did you get to that point where you could feel the energy kind of building and knowing something's going to happen, and or is it just
well, every day on the close it was chaos, and every day at the close. So if you were in Chicago, they would have the orders. Well, the same thing was in Winnipeg, but the orders were called into the phones, the little booths they had right on the side of the floor. In Chicago, with the scale being so much larger, it might be, Revco's desk was maybe 100 feet from the soybean options pit. So they're getting a call in. They've got a clerk to take this order, that some hedger just did some business or whatever, and he wants to do, 1,000 soybeans at the market or whatever, 5,000 soybeans at the market or whatever it is. And it's got to get executed prior to the close because you just took the order at 113. It closes at 115. Guy's writing the stuff down. Then he's got a clerk that's running to the pit to get the order to his trader. And there was chaos, guys smashing at each other and whatever. And you had some really funny things, like some of the shorter guys would put like hockey pucks on their shoes so they could be seen better in the
Yeah.
pit. And then there was a hierarchy of what step you stood on based on how big of the big guys got to stand on the outside so they could access their the orders quicker, right? I think the deferred futures were supposed to be in the middle, but it was generally the biggest traders or the brokers would be most accessible around the outside. So yeah, it was consistent that at the end of market on close stuff was always chaos. And actually, when I was there, I think we were making record highs in wheat. I mean, it'd be less than what we're considering poor wheat prices today. But I mean, as you know, the cash and the futures prices are so much lower then. But I think we had a big rally. So a lot of the equity traders actually moved into the commodity futures side at that time. So it was a lot more just, more higher prices, more volatile prices is more opportunity for arbitrage, to exploit the quick differences. So there was a lot more people in the pit then than there would have been a couple of years prior or a couple of years after as well.
I think grain prices started rising about 96 or so, didn't they? So Xcan, I always understood Xcan was special crops, but I guess they were canola too, were they? Or what was, like, you went to
Yeah,
Xcan?
Xcan was canola too. I mean, I think Xcan was created to be the export arm for the prairie pools, right? So
Right.
you had, I mean, I'm not sure how active Cargill Canada was in exports at the time. And, you've always had these family companies, Parrish and Heimbecker and Patterson Grain. But the big two on the export side and offering risk management services would have been UGG, right, which was sort of the open market company, and the Prairie Pools, which of course were wheat board backers, and then their kind of their export and special crops group, which was Xcan. So Xcan had, as part of their, like, we were cooperatives, of course, at the time that the pools were, and as part of their services for the farmers, they set up futures hedging desks. So there was a group in Red Deer for Alberta Pool. There was a group in Winnipeg for Man Pool. There was a group in Regina for Sask Pool. And then they had, it's called Pool Commodity Trading Services. And then we had a few guys on the trading floor to put in, so we did business for farmers. We did business for the same commercials that RBC or whoever was hedging for. They might use us one day or use somebody else the other day, etc. So that would have, how long did PCTS go? There must have been, well, Saskpool bought Agricor, and I guess that's sort of how the Xcan thing it became one, right? We all consolidated in one company at that time. And then, of course, there was the Ag Pro division, and well, there was a million divisions actually that Saskpool owned. So
Right. So, okay, so what year did you start with Xcan or the pool then? What year was that? Was that
well, I guess the trading group, the Pool Commodity Trading Services, that was 97. So I was in the futures side as a retail broker and as a floor trader from 97 up until between Regina and Winnipeg up until 2000. And then I um, transitioned to the cash side. I went to Sask Pool to be a Sask Pool employee. Um, it seemed to me I was it seemed to me that the guys that were making more money was actually the cash traders rather than the people working for the grain companies rather than the people doing the futures. At least for the employees. I mean, some of the independent guys probably did pretty well. You know, and when they did well, they did really well, and when they didn't do well, they didn't do really well. but but yeah, so I wanted to get into the cash side of the business, and I applied to a few different companies, and I went to work at Saskpool as the junior lentil merchant. And despite growing up in West Central Saskatchewan and having some experience with lentils, I basically knew absolutely nothing about lentils. Really, from the stuff that I needed to know, I didn't know. And I went from the junior lentil merchant to the senior lentil merchant in I think 6 weeks because my boss moved when his boss moved. So
Oh,
it
wow.
was I become yeah, a lot of 70-hour weeks figuring out like where is Mauritius and what is a Greek lentil and what's this Turkish embargo doing to the red lentils that we've got 20,000 tons sold to Turkey, and why is it stuck at a transshipment point in Italy, and what does that mean, and what is the cost of demurrage on these containers, and what am I going to do with it if Turkey never takes this stuff again? And it was, oh my God, it was pretty cool. Like for me, that's like somebody that grew up reading National Geographic and looking at all these places and thinking they're cool. It's like, wow, I'm dealing with these places. And I got to go to them eventually as well. Like, some of the risks that we took on, like when I started with Saskatchewan Wheat Pool in 2000, farming was still pretty tough then. I think when were you farming, Trent?
I was, yeah, 2000 through there, early two. I think farming started turning around 2007, maybe 2008.
Yeah. So when farming was bad was when grain handling margins were bad as well, right? And more recently, farming is, I mean, kind of is on the downslide now, but the last few years has been pretty good, and the grain handling margins being pretty poor. But at that time, it was linked. And anyways, it was so really we were reducing our risk exposure. We wanted to. So I was in one of the few commodity groups that actually was doing export trade, right? It was to selling C&F, so it was pretty fun. Like I remember I did a cargo of lentils out of Thunder Bay using nearly all third-party processors, these 10-car shippers, Copeland Seeds, and et cetera, like 10 cars, 800 tons. You needed to put multiple weeks and then you've got the counterparty risk in Algeria, with a letter of credit through a French or New York bank or whatever. Is like the amount of risk that we took on just to put grain through to handle something because it was tough making any money putting anything through our assets um, is sort of amazing. It did turn around, like, and it got really good for a while, right? Um, yeah, 8 years later, it got awesome. Like margins were fantastic, but there was a while it was a good experience for me, and we were doing lots of interesting things.
How many years were you on the lentil desk?
Well, I was doing lentils, and then the pea guy, which was the bigger commodity, left, and I was doing peas or lentils and peas. Like I did a few different things. We had CSP, the splitting plant. I did marketing for that as well, which was kind of interesting. The value added stuff, doing tenders. Um, but that I was on the pulses for 3 or 4 years, I think, and then I got, you know, promoted into the oil seeds. Although so canola, but specifically canola. I didn't do flax. And initially, because we were somewhat risk averse, because margins were tight and we didn't have a lot of capital, we were mostly a FOB seller, so we weren't selling destination markets, right? We weren't doing the C&F China or cost and freight delivered to China or Mexico or any of these guys at the time. It was all FOB business. We had a partnership with Topher, AC Topher, which was mostly owned by ADM at the time. That was an unbelievably skilled group of traders based in Germany. They probably had the best market intelligence of any global commodity group. So we were partnered up with them. We'd sell FOB, they'd sell C&F. Part of it was a cash flow thing, right? Just making sure, because at the time we had really tight on cash. So, we wanted to get our money when the boat's loaded, or actually, I think for a period of time they even paid us in store. Just they pay us when the commodities got to port. But then Mayo came in and wanted to expand the company, and we expanded. We started doing lots of destination markets around the world, all sorts of direct business with all these places. It was really cool because there was a period of time when I was the canola guy. Like, we were dominant. We were 70% of the trade in China, about 50% of the canola handle in Canada, but China was really a price setter because it was the discretionary buyer of canola that would, whether they bought 2 or 5 million tons, they really were the price setter. So if you had a dominant position like we did with China, we were market makers for sure at the time.
That's neat stuff. So
Yeah.
you would have been probably one of the larger lentil traders at that time too, just by virtue of the wheat maybe, or
I don't know. I mean, the pulse crops, they're so much smaller than they are now. My position, I only did about 50,000 tons a year of lentils. I mean, I did with that 50,000 tons a year of lentils. I did a lot, though, I will tell you that, because I was doing everything, and we were doing a lot of 1 lots and 2 lots. And like, I remember, this gives a real good sense of how intense it was with all the brokers we dealt with. And like, I was kind of dealing with every aspect of the business, from operations to, I mean, I had help on the documents, et cetera, but I was involved in that. We had a broker for most of these destinations. We would use a broker because, well, I only spoke English, and B, you really should be using a broker for some of these destinations because they have buddies that if they make some money, it's your risk of the trade going south is dramatically diminished if you've got a local in that country that's buddies with the buyers, right? Yeah. So, but anyways, I remember I went to a meeting. We'd have a risk management meeting or something like that, every couple of days. And I went to a meeting and I was gone for 45 minutes, I think. I came back to my desk and my voicemail was full. And at that time, the voicemail on your desk phones with SaskTel was 26 messages. I got 26 messages in the 45 minutes I was gone. It was just like overwhelming. So the volume was small. I mean, it was minuscule, right? Relative to, it was 1% of what I was doing on the canola desk. But I mean, when I was on the canola desk, I had people helping me with everything, right?
Yeah.
So it was, and we weren't doing 20-ton incremental sales of French green lentils, right? Or whatever. You're doing 60,000-ton increments. So quite a different scale.
yeah, absolutely, yeah. And you got to quite an experience. Got to see the world, I would say, probably.
Yeah, it was. No, it was cool. Like, I mean, I haven't been to China or Japan since I left Viterra 13 years ago, but I was there many times and, you know, saw lots of cool things. I met lots of cool people and yeah, it was a really neat experience. And, and the markets that I went through as well, like I'm trying to think of the year when crude oil went to $150 a barrel and then it went down to $40 a barrel or whatever thereafter. Like some of those experiences at that time, I remember we had C&F sales on to China at, it was 750 US dollars a ton. Ocean freight was sky high. The Canadian dollar was around parity with the US dollar, and futures were high. And by the time there was two contracts that I remember executing, one to Mexico and one to China. And by the time those vessels were set to sail, the contracts had gone down by more than 50% because ocean freight alone went from, say, I don't know, it was a Handymax or a Panamax, but a big vessel from Vancouver to China went from maybe $100 per ton to $20 a ton or something like that. Like just insane, right? Insane. So, I mean, you'd sell on a letter of credit, and if you have all your documents correct, you should have nil risk of getting a default, right? If the letter of credit is open to begin with, you could get your product in place into the port, and if the letter of credit wasn't opened, then do you load the vessel or not, or you just keep your port terminal plugged up, right? And what's the opportunity cost that if you can't put other grain through there because it's plugged with your canola? So there's that component. And then secondly is, like, if a buyer wants to, if you're dealing with bad buyers, they can default on you and it doesn't matter. They'll figure out a way. That's how it is, right? Like, I see these contracts that we would get written up that our legal department would vet and would have 5 pages of addendums, just like farmers sign now when they deliver to a grain elevator. They kind of didn't matter. Like, they did matter, but the most important thing was your relationship with the customer and being on top of what was going on. And actually, those 2 contracts that I remember, so it would have been, probably a $40 million contract to Canola that was worth like $18 million by the time it was arriving in China. And this was a mid-sized trading company. He'd probably hedged it and sold it and speculated on some of it. And he's hoping to make $5 or $10 a ton after, his capital costs and whatever. So he was hoping to make a couple $100,000. He was $22 million offside, right? So how could I possibly expect to get paid? But we executed. Like, I remember China having a bad reputation at the time as buyers defaulting. We had no issues. I mean, they didn't default on that. We had a sale to Mexico as well. Same thing, was a smaller cargo. That didn't get defaulted, although I think CHS was tied in with it, and they came up with the cash for the, which is the big U.S. cooperative, Cenex Harvest States. And I think they ended up getting an equity stake in that crusher because the crusher was so offside, CHS had to back them, right? But okay. But yeah, if you're in the markets long enough, you're going to see all sorts of things and crazy things, and that no one expected. And if people had expected, it wouldn't have happened. You wouldn't have had that level of, crazy things happen, and they will again, right? I guess to a certain extent, maybe crude oil is somewhat of an example of that right now. Who thought we'd be at $100 a barrel a couple months ago?
Yeah, exactly. I remember trying to establish an exporting business, exporting kabulis and coriander, and thought there was an opportunity there. And it didn't take me long to understand that the risk as a farmer doing this wasn't worth the reward.
Wow.
There was little margin that I could I didn't know what I was doing, mind you, but wasn't much of a margin, I found out. And the risk of default could have been catastrophic. So
I think there's periods of time where there is, like, just your natural margin. And by natural margin, I mean like what a reasonably knowledgeable person can make, what the industry's making, like lately grain handlers and special crops companies, the natural margin has been really poor, although it seems to be improving here because the crops have gotten bigger, so on and so forth, the last couple of years. But I mean, the obvious way to figure that out is just to look at all the people that have gone bankrupt recently. Pretty well-run companies, right? Like, that just couldn't make it.
It's tough business.
And there was a period of time where it was, if you're a smaller guy, the margins were good if you could access export capacity. On the bulk side, I remember when I went from Viterra, and I started working with Seaboard Corporation. The natural margins were fantastic, in a lot of commodities. Even I remember when I was with Seaboard, I was sort of my commodities to trade were the non-special crop stuff. But I remember talking to Dave Nobbs one time. I'm like, "What's Track Vancouver trading at?" And it's X. And then I backed it off to the farmer with rail freight, and I'm like, "Holy shoot! I can buy at a competitive price from the farmer and sell for new crop and lock in, I don't know, $100 a ton. I think, if you did that math, well, I don't know the math today, but if you did that math a year ago, you would be locking in maybe negative from a branch line, after paying somebody handling. Um, so it's everything's cyclical. And um, all these resource companies, whether it's a farmer or a fisherman or a grain handler or whatever, it's all cyclical. But yeah, generally, the one thing that I would say that's generally a truth is that the amount of money that grain companies make buying and handling and exporting is way less than farmers think. It's way less.
Yeah,
Now they can make some good money on volume, or at certain points of time it just clicks, and it's that one in every 10 years where you make 10 years of margin. In the same way as a farmer, you made 10 years of margin when canola went to 20 some dollars and durum went to 20 some dollars.
yeah, and just that
that's sort of
example.
that quality.
Yeah, and that example you gave, $100 margin to minus negative 50, negative 15, and there's some default risk, so not always that wide, I wouldn't think, or everybody would be doing it. So
Oh yeah, no, there's no, absolutely. I mean, the markets are. Man, I'm a believer in capitalism and it creates wealth, but there's some inefficiencies, and it takes some time, and there's some barrier to entries. It might be scale or the one thing was, well, the natural margin. So back to, when the margins were really good, I don't know what year was that, 2014, 2015, maybe. The wheat board was still, that was at the end of the wheat board monopoly had been eliminated, but the wheat board was still operating, right? They had some, I think farmers had the option to sign up with them. They had some contracts. They had access to port fobbing at Prince Rupert at the published rate. So you could look on the website and it'd say, elevation in Prince Rupert's $22 a ton. These guys had locked in $22 a ton. They could access it. And margins were way better. The natural margin that people that own those assets, if they bought the canola and put it through at the time, you're making 50 or $60 a ton, right? Or $70 a ton. So I remember phoning up the wheat board when I went to Seaboard and I said, "Hey, I'll pay you guys $40 a ton for, I don't know, 100,000 tons of elevation. Like, I'm paying you $18 more than you're going to pay. You're locking in a profit with no risk." For some reason, they didn't want to take it on, but I mean, that just gives you an idea how good the margins were at that time. Now it'd be, yeah, it's not as good. So
yeah. So you were at the wheat pool, and Mayo came in, did the restructuring. Did you, were you there at kind of when the wheat pool, I guess, what happened there? I can't
we
even
went
remember what
through the
happened.
restructuring. Yeah,
Which,
when they the debt holders were given equity at kind of they took a bit of a haircut and they got equity, and yeah, I was there.
okay.
So I remember we were all listening to our radio, and I think it was, I don't know, I guess the vote or whatever of the debt holders or whoever, are we going to be in existence tomorrow, etc.
Yeah.
But you know what, that like we as a company, we dramatically consolidated or reduced our staffing. So as a young guy that wasn't getting paid much relative to the guys that had been there for 10 years, I didn't get severed. I just
Oh
I
yeah.
just got their jobs and didn't get any more money. So I got experience.
Yeah, I
So from
bet.
an experience perspective, it was like fantastic, right?
And Mayo had a reputation as a strong leader too. So
Yeah, I think Mayo had a a vision. He was visionary, right? He had a vision that he could communicate when he went. He was after every quarterly report or announcement, he would come down and we would all assemble on our floor, the second floor, and listen to Mayo. And he would inspire you about how great things were and whether they looked great or not on when you'd read through the financials. Generally it was some optimism. He was a good, he was very good with financial markets, right? Good, and that's, I mean, in a publicly traded company, I guess that's one of the key skill sets that you need is the ability to sort of sell yourself to the financial community, right?
Sell
You know,
yourself, sell yourself, sell the company, and inspire the.
sell the
Oh,
vision, Yeah, I mean, we grew dramatically in scale. Um, and I guess like did we create a lot of value in the stocks? I mean, they were up a little bit when we got bought out, but it wasn't dramatic. But at the scale of what happened from nearly going bankrupt to becoming this international company, through acquisitions, buying Agricorp, buying ABB, Southern Australia's monopoly grain handler that was handling 3 to 8 million tons a year, expanding offices all throughout the world. And yeah, there was, and at the time, every time we bought out another company, it just seemed like a natural evolution. And there was being one of the guys that had been in on the ground floor when we were just about bust and started to grow from there. I got the benefit of every time I bought someone, I was the smartest guy. All those other guys, they didn't know how to do things. And that's how it is, right? It doesn't matter what company you are or what industry you are. If you are the acquirer, your way of doing things is the best way.
right,
And
right.
that's you impose your your systems on the acquired, I think. And there might be some melding of that. Maybe some companies are a little bit different, but my observations was it was always like that.
Yeah, that makes sense. Makes sense. So, was that after the name change to Viterra, or
Yeah.
yeah?
Yeah, no, we that name change from Viterra happened after we bought Agricorp.
Okay, and then my memory's failing me here, but who ended up buying Viterra? It was
Glencore.
Glencore, right? Yeah.
Yeah, so Glencore was started by Mark Rich. Um, and they were a huge multinational, primarily a trading company, not asset intensive trading big positions, right? In oil and then they got into ag and I think Glencore still exists as primarily as a mining company. Um, yeah, and so what Glencore bought, they were buying assets. They weren't buying a trading group. We were doing on the commodity side, like we were doing more volume of international trade than they were, but they were the buyers, so they were the smartest guys when they bought us, and they wanted to buy assets and they wanted to implement their way of trading. So everything started to flow into uh, Rotterdam in terms of the trades and the positions, the way they were held, and strategies, etc. But I will say one thing that was immediately obvious when Glencore bought us. So our combined volume of trade increased, right? And we immediately realized some synergies on ocean freight, cheaper ocean freight, because you could operate vessels where you knew you could. It's sort of like a backhaul on trucking, right? But this is just on a global scale. If you're doing one-way freight, even if your volume is big, if you're just doing Vancouver, China mostly, you can't. Well, the scale automatically was there were some synergies with the bigger footprint we had. Another thing, because they were a trading company, and our background at Viterra had been I was an open market guy and I was a non-board guy, but a lot of our guys came from the Canadian wheat board background, which was sort of a different way of doing things, which is mostly focused on volume because you had fixed elevations, and the only way you made more money was to handle more wheat. right? To figure out how to handle more wheat. Because you couldn't influence the margins. You can make some money on blends and, buying the right quality of a 2 red spring to blend and ship out as a 1 red spring or whatever. But your margins are relatively fixed, whereas Glencore had no loyalty to this philosophy as handling grain with the wheat board mentality about volume. They didn't really care about volume as much as they cared about margins. And, I remember when we first met with them, they said, okay, our combined share of, international trade in flax is 70%. We can influence things. We don't have to be a price taker. We don't have to lock in 10 months of sales so we're willing to, risk some of these operational efficiencies, such as railcar planning, with the expectation that it will be more than offset by the margins we're going to extract from the market because we're so dominant in some of these commodities,
Right.
So they definitely brought a commodity trading philosophy, and some of their senior guys were still traders, right? Whereas typically at most companies, after you get to a certain level, you graduate beyond being a trader. It's just sort of the natural evolution. And part of it is because most people don't really like that. Now, I'll differentiate. I'm not marketing. I differentiate between trading and marketing. Like you have a marketing guy that goes and talks to the customers and takes them for dinner and says, thanks for being our customer and let me know if you have any issues, right? That you can handle and you can do that forever. But being the marketing guy where you're long 100,000 tons of canola and you can't sleep at night because you're offside or you've got a contract default and it's your position. Most people, as they get a little bit older, just don't want to do that anymore because you got to take your kid to school in the morning. And if you didn't sleep all night because you're offside on your canola spreads, it's, you just can't handle it.
Yeah, I understand it's got a shelf life to it.
For most, yeah, I think. I mean, that's just generally how it is, right? It's usually the younger guys that are. I mean, not always, but it sort of is. It's pretty. You need a pretty strong constitution to constantly have risk positions, right? And every country or every company is different because I remember, Trent, you asked me something to the effect like, have you got any experience day trading or something like that? Or do any of your guys you work with, do they day trade or did they day trade? Like you actually, if you're with the type of position that I was with, you had to day trade, right? Because I was not only responsible for the sales and the execution, I was responsible for hedging the position daily. And we would take positions, right? We had a mandate not to end the day with a zero position, but to end the day long or short, so you were day trading. You're deciding, I just bought 5,000 tons of cash. Do I sell RSK or do I sell RSX to take on a time spread exposure? Or do I stay long or did I pre-hedge it the day before or whatever? So now, not all the companies do that. Like some companies they have a mandate to have no risk, no flat price risk exposure or to eliminate it, to minimize it. And then they have a hedge group that is responsible for that and responsible for, taking care of all that stuff. But that wasn't how it was when I did it.
Interesting, intense work, isn't it? There's some books I've read. I don't think I shared them with you. Have you read any of Jonathan Kingsman's books? Commodity Conversations? And
I don't think so, no.
Yeah, I'll send you the links to them. It's about people that had your job in your role, which for me is fascinating. And you might recognize some of the names, some one or two Glencore people in there and whatnot.
Okay.
So, yeah. So, what are you doing now? What's life look like for you?
Well, I'm not super busy. A lot of what I'm doing is discretionary, meaning, I've got some farmland investments that I get custom farmed. As you know, I've got a little bit of real estate investments, but I've got property managers for. I do, I'll I'll trade commodity futures, not actively. It depends. Sometimes if things are clicking, I might stay in it. But I find the way I trade it, I kind of want to be watching it all the time. I don't usually put on a futures position that I just let ride. Like if I'm gonna be trading futures, I want to be watching it every day, which is funny because I've got the same flat price risk as I do grain in the bin or grain, but I look at it differently. I guess it's because I get a daily P&L that's a little more transparent on the futures. So
Yeah.
maybe that's why I treat it differently. But you know, I kind of watch and reposition my stocks every day as well. I'm not a day trader. I only trade from the long side on the stocks, but I'm pretty active, at least reviewing them. If I'm not doing anything, I mean, I can tell you the dividend yields and I can tell you what happened today on Bank of America or Bank of Nova Scotia or XEU.to, the European index stocks or whatever. And I guess, yeah. And I'm also, as I mentioned, getting my real estate license. So I'll be spending some more time doing that. I figure the skill set that I've got can probably add some value to some guys that either want to buy or sell farmland, and maybe I can give them some advice on some non-farmland related ag related things in the meantime. So I mean, I've been doing that sort of as a hobby. Like I'll go in and I'll see something advertised for sale and I'll go on to the SAMA website. I'll look at what traded in that RM. I'll look at what the crop insurance guarantees are. And it's just sort of like a hobby for me. I think I told you a while ago that when the new US renewable fuels legislation came out, I probably spent 50 hours reviewing it because I wanted to understand. Like I thought it might be a paradigm shift, like so significant that in the same way that we saw, 4 years ago when the US, increased these renewable fuel legislation and canola went to 20 some dollars a bushel. I was thinking or think there's a potential for that. It's so, renewable fuels and legislation is so influential on price direction. But it's hard to get information on that. I spent uh Imperial Imperial Oil at Strathcona they announced maybe a year ago that they were going to use 1 million tons of canola oil to produce 1 million tons of renewable diesel. They hadn't been doing it yet, right? And I knew there was some federal legislation that came out, subsidies or whatever, and I wanted to find out if they were actually producing, right? It's just so I can put into my S&D and my assumptions about what canola prices are going to do. Man, I don't know how many calls I made to Imperial Oil today. And I got the security guard, and then I got some other guy in Georgia, and then I got, unless you have those relationships, it's sort of like the questions you're asking me about being the canola guy. It's kind of like trying to how a farmer might try and find out what the price of what canola is doing in China. Like it's really tough to get into that unless you're in it, you know.